Hi, this is Ferre with Tax Sale Support with another video in our Tax Sale Fundamentals series. The focus of this video is on tax sale buying methods. So we're talking about the various methods that can be used to purchase either tax liens or tax deeds, since we're talking about both. So let's talk about what some of those buying methods are and how they can be utilized, and also the way that they have affected the investment. So there are four primary buying methods for tax sales. They include live auctions, online auctions, over the counter, and secondary, or the secondary market. Now, give me just a moment here to talk about each one of these and discuss some of the benefits and drawbacks that each one presents. First off, live auctions. Live auctions with tax sales are the oldest and most common buying method that you'll find. In fact, there are still many states that only utilize a live auction system, and they are conducting the tax sales essentially the exact same way they've been conducting them for the last 100 years, meaning that the tax sale itself is controlled somewhat by state law and what state laws require. And then each county also has some input as well, which is why you get such a broad variety of tax sale types with counties, is because everybody does things just a little bit differently even within those systems. Now, live auctions are an excellent experience. If you have the opportunity, we would encourage you to attend one of these live auctions. In fact, even if your state utilizes some other system, there probably still are live auctions that are held. So I would look into your local county if you'd like to attend a live auction, or look into another state if you'd like to travel for it. Now, there are some benefits to live auctions. Firstly, that they limit the amount of competition that you're competing with. Now, that's usually the case because there are always exceptions to that rule, but because you're required to travel to the actual sale, it generally does limit the competition. The only exceptions to that are some of the counties that I've seen that have a high participation rate among the citizens in the county, which sometimes happens. Now, prior to a live auction being conducted, lists are usually available about 3 to 4 weeks beforehand. And most of your counties that are offering these live auctions end up printing their tax sale lists in local newspapers, which is oftentimes what state laws require. So many counties are just sticking to the letter of the law and are doing things the exact same way they've done things for a long time. Now, the primary disadvantage with live auctions is also what means there's usually less competition, and that is you have to travel and be there in person. Texas is a great example of a state that holds live auctions and has had a lot of success with their live auctions. But again, you have to travel and be there in order to participate. So they don't necessarily work for everybody, but fortunately, there are other ways that you can buy tax liens and tax deeds. The second method are online auctions. Now, online auctions are a relatively new concept with tax sales, and that's because they've really only been around for less than 20 years. I have it listed here that they started in the early 2000s. When Steve and I initially started with tax liens and deeds, the first online auctions with Florida, I believe, were just getting started. Arizona was also one of the early states that began to play around with online auctions. Now, online auctions offer tremendous benefits, and that is mostly because you're not required to travel. They've tried to simplify the investment process here for you. So, in doing so, they've also made other things easier, in that most of the time when you get a list, a tax sale list for an online auction, the counties will generally try to include links with each one of those, with each property included on the list, so that you can pull up the property records directly. So this is something they've done to make the investment easier. Now, part of what's made online auctions possible today is the fact that counties now have online record systems and online record search capabilities, which is something that most counties didn't have 20, 25 years ago. So this is something that's still very new for counties and something that we're still seeing changing all the time. Now, most online auctions for tax sales are conducted by third-party auction providers, meaning that there are some different companies that offer online auctions and that have relationships established with counties so that they can offer those auctions. Now, some of the primary third-party auction providers are Real Auction, which you can find these websites, realauction.com, bidforassets.com. There's also Grant Street Group, SRI Auctions, and Civic Source. In addition to those third party providers, there are also states and counties that have produced their own type of online auction system and continue to use that. So it really depends on the state and the county as to whether or not they use one of these third party providers or whether they conduct their own online auctions. But the primary benefit of online auctions is the ability to invest without travel. And that is the biggest thing that's probably changed with tax liens and tax deeds. When Steve and I first started with tax liens and deeds, the reality of it is if you wanted to conduct any kind of due diligence, you had to be at a county records building to pull up those county records. And if you wanted to buy anything, you had to be there in person as well, which didn't make it very feasible to try to pursue on a heavy level. But now that you can do it from home, it makes it easy enough that anybody can do it. The third method is over the counter, or OTC. Now, what we're describing when we talk about over the counter tax liens or over the counter tax deeds, we're talking about tax liens and deeds that were offered at a tax sale. So they were offered at auction, but they didn't sell. So since they didn't sell, the counties are forced to put them back on the books. Okay. Now, for the county, that doesn't necessarily work well if it doesn't sell because it means they've missed their opportunity to collect that delinquent revenue that's owed to them. So the county, many counties, will offer these liens and deeds after the sale. After they were already offered at a tax sale, they'll offer them directly to the public over the counter, meaning that you can look through a list of properties and if you find one you'd like to buy, you can simply make payment arrangements with the county to purchase that lien or deed. Now, if you're purchasing over-the-counter deeds, we're talking about properties that were foreclosed on and they're now on the books. So they may be referred to as county-held property, something like that, because essentially the county is now the owner of the property until they can find a new owner for the property. So you'll sometimes see over-the-counter referred to as assignment purchasing. Anything related to county-held is also the same thing, or some may say over the counter, but it's usually something that where every county has their own terms. Now, there are some unique benefits for over the counter investing. There could be a million different reasons why liens or deeds wouldn't necessarily sell at auction and may be worth buying over the counter. It all depends on what kind of competition is at the sale, how many people are there. Also, many properties get overlooked or sometimes bids fall through on properties. It could be that maybe the property is junk and that's why people ignored it. The only way you really know that is to look at the property and try to perform your own due diligence. If you're buying over-the-counter tax liens, they offer a couple other benefits that are worth noting. The first is because you're purchasing the lien after the sale, they don't consider that to be any competition. So you'll automatically earn the maximum interest rate for that state. So for instance, in Florida, if you buy over-the-counter tax liens in Florida, you're going to earn 18% annually on it, meaning that it's accruing at a rate of 1.5% per month, or 18% per year. Now, the other benefit of over-the-counter investing with tax liens is that the redemption period for the tax lien begins on the date of the tax sale, whether the tax lien sells or not. So if a tax lien doesn't sell at auction and it goes back on the books, that redemption period is still ticking away from the time of that sale. So if you were to purchase an over-the-counter tax lien 6 months after the sale, or let's say 1 year after the sale, So it's been on the books now for the last year, and it had a 2-year redemption period initially. When you buy that, you no longer have to look at the 2-year redemption period because a year of that has already elapsed. So you now only have 1 year left of that redemption period. So in a way, you can try to reduce the overall duration of the investment by selecting liens with less time remaining in the redemption period. In fact, it's possible to buy liens that are foreclosure ready, which we're actually going to talk about as well here, in with our fourth method. And the fourth is through the secondary market. Now, this is something that's also brand new. And part of the reason for that is because in the past, I don't think the systems were set up in place for people to buy these. And it also wasn't very familiar for most people. When we talk about the secondary market, here's what we're talking about. We're talking about purchasing tax liens directly from large institutional buyers prior to them redeeming. Okay, so the reality is institutional buyers like big banks, they've been purchasing and investing in liens for many, many decades. Now, they are only interested in one thing when it comes to investing in liens, which is what most liens are good for, and that is earning high interest rate returns. That is the only thing they're really interested in. When it comes to property acquisition, these institutions have no interest whatsoever in acquiring property. So that's important to remember that they are interested in the easy money, meaning that they buy liens in bulk and they wait for them to redeem, which means they essentially just get checks in the mail. That includes the initial investment plus the interest that they've earned. Now, with the secondary market, the idea here is that these institutional buyers are only interested in the interest rate returns and they're not interested in trying to foreclose on properties. Well, as you learn more about tax liens, one of the things you'll figure out is that some tax liens need to have a foreclosure filed against them in order for them to redeem. Meaning that there are many liens that won't actually redeem until somebody tries to pursue foreclosure against them. And then the property owner, when faced with possibly losing the property, they will step forward and pay off the amount. So, with these types of properties, what ends up happening with the tax liens that these large institutional bidders purchase is they sit on the books and wait. They wait for them to redeem, and of course, a large percentage of them are going to redeem throughout that time period, but they're going to be left over with certain liens. Well, in the secondary market, it's all about buying these liens directly from these large institutional buyers. Now, the way the system works, because it's different from other systems out there, and it's something you can do with us. You can't do it in very many places, though. But the idea is this: we have a portfolio manager that we work with. And this portfolio manager, he puts together portfolios for us from an inventory of secondary tax liens. Now, the idea is that when we let him know what we want, that he searches through the entire inventory to find those tax liens that best fit that need. So you can select a number of different types of liens depending on what's important to us. But the idea is that the portfolio manager performs due diligence while he's searching through these. And so these are liens that have had due diligence performed on them beforehand. And when the portfolio manager meets with you and finds out how much it is you want to invest, he will put together a portfolio of those properties and then he'll go through those properties with you so that you can see how each one of these work. Now, some of the liens that you purchase are actually foreclosure ready, which means that the redemption period has already passed. Now, the main advantage of having foreclosure ready tax liens is that it enables you to reduce the investment duration. And the reason for that is when you purchase a tax lien, if you initiate the foreclosure process immediately, which you're able to do with these tax liens, and by the way, the secondary tax liens that we have are almost all Florida tax liens, which is nice because we understand Florida very well. And initiating foreclosure in Florida is really easy because they're what's called a self executing foreclosure state, meaning that the counties within Florida practice a self executing foreclosure. They handle the foreclosure proceedings. They handle the letters and things that need to go out. The only thing that we do is simply send in a form to the county telling them to begin that process. But what it does is once the foreclosure notices go out, it's usually between 3 to 6 months before a resolution is reached. Whether the property owner pays off the amount that's owed or whether you end up foreclosing on the property, it can usually be handled within that time, within about 3 to 6 months. So, what this does, it enables you to dramatically reduce that overall investment duration when you purchase these, and it also increases your chances of acquiring property. So you can purchase the liens and still earn that high interest rate return like most liens do when they redeem. But you do have a higher chance of being able to foreclose on these properties because they have already gone past the redemption period and are now eligible to be foreclosed on. So there are some real benefits, advantages to secondary investing. What it's really all about, though, if we were to sum it up very simply, secondary tax liens are all about getting all of the benefits the tax liens offer, but without the huge commitment of time and effort in learning how all of it works and trying to figure everything out on your own. The idea behind this is to lean on people like your portfolio manager to select the right liens, and then the due diligence you can perform on those afterwards before you buy is simplified, very easy to do, so that you can make a decision on it quickly. So the secondary market tax liens are perfect for those that have more money, I guess, to invest than they have time. I think there are a lot of people like that that would love to get all the benefits of tax liens but don't have the time to dedicate to it. And for those people, yeah, secondary tax liens are perfect. So those are the four systems, the four methods here for buying tax liens. We're talked about live auctions, online auctions, over the counter, and the secondary market. So if you would like more information, you can get a free ebook at secretsoftaxlieninvesting.com, or you can also go to our membership site, which has training and tax sale lists at taxsalesupport.com. If you'd like to see more of these videos, please subscribe.